Perfect. So some familiar faces in there, Stuart, and lots of people kind of joining. So we'll give them a couple of minutes to get comfortable.
Belton.
I was going to say get a cup of tea, but maybe that's a stretch too far.
All right. That's the water. Quick.
But, perfect. So just a bit of housekeeping. We are recording today's session. So again, if there's any bits that you want to kind of play back, then that's available. We've also got the chat and the questions and answers. So hopefully someone can hear us and they will drop something in either questions and answers or the chats.
And please smash in the questions. Like, hopefully, I want this webinar to be as open as possible and share as much as possible. So, any questions or anything that's like wants clarification or more detail, then ideally, like jam it in there. And even if I don't get back on this session, I will come back to you in one. Well, we will come back to you in one, guys, or another one. So, I want
Perfect.
to try and make it as useful as possible for everybody.
Perfect. Absolutely. Absolutely. So in terms of in introductions, bit about yourself and a bit about me, Stuart. We're going to do a quick poll and then we're kind of jumping into three questions. So pricing strategy, optimizing your pricing, and then future-proofing it. And I think like how this whole conversation came about is you and I are always kind of talking, and it's the whole bit of what we're trying to do is wouldn't it be great if we could leave the industry in a better way than how we found it? And I think all too often I'm having conversations with people running firms, and actually I feel as though they are struggling at times. So the whole bit of pricing is really, really important. Um, so in terms of we've got the legend Stuart, and I've written some stuff about you, Stuart.
Oh, lovely. Very kind
So
of you.
MVP, tick.
Yep, zero MVP. Yep.
Very open and share what you do. You say what you do. You speak with passion, and I think you're very, very open. So again, I know you're very open around sharing your own pricing, sharing your own kind of KPIs. So if anyone's got any kind of questions as to how Stuart does it, he's always open for kind of sharing that, and I know you can get access to it. So we first met back in the days when you were cutting your teeth at UHY.
Indeed. Many moons ago.
A few drunken conversations which perhaps helped you nudge you to
Did. You were the reason I left. For anyone watching.
and then that was moving on to accounts and legal where I think you took the whole kind of growth by storm and you helped to kind of grow that business, and I'm really excited that you've now building your own firm in Cloud 10. So yeah, a massive kudos to you, Stuart, and I
Yeah.
think yeah, the passion that you speak with is fantastic. And I think some of that is you almost like the legacy bit of why you're doing it. I know your dad struggled when he was running his own business. And so it's that whole bit of how do you give something back? So yeah,
Yeah, making
absolutely
a difference.
kudos to
Yeah,
that.
absolutely. And in terms of like scaling, like Cloud 10, just for people's background, for those that don't know. So I started on the 1st of April, ironically, 2024, with zero clients, zero staff, zero income, 0, 0, 0, 0. We are now just as of next month, will have reached £50,000 of recurring income. So we're 600k turnover with one-offs of about 150 to 200k a year at a standstill. So we're over 750,000 in 15 months. We hired 8 staff. I've been profitable every single month from month one. I've not put a penny in, and I'm now able to take out more than I was on my 100k salary at accounts and legal. So like in terms of it's not all rosy. There's been lots of craziness and difficulties amongst that and bits and pieces. But when it comes to growing and scaling, like the pricing has been a key part of that from day one, really. And even as our services evolve, it's been massive.
Yeah, yeah. And I think for me, one of the key things you said there, it's about the people. I think it's how you're doing it. This isn't about a scheme to get you rich. It's about how can you bring people with you.
Yeah.
And I know that the team that you are working with right now are people who believe in your approach to kind of finance. And so again, I think that pricing is very important, but the whole bit of how you do it and with your people is critical, and
Yeah.
that will kind of come across in the discussion today. As I said earlier, let's make this interactive. So if you've got any questions, then kind of please shout, and yeah, we'll get into a little bit of the discussion. So before I do anything, I'm going to try and bring a bit of technology in. So we're going to do a poll, and this is what's your biggest pricing challenge right now? So I am going to launch that. Hopefully people can see that, and we're going to give you 15 seconds or so to kind of put in your questions. Phew, we've got one answer, two answers. Well, it's cracking up now.
Boom. People are
Boom.
alive. We've got real people. It's not bots. It's not bots in the chat.
Oh, I think you're going to like this one, Stuart. So I'm going to give it, do the old classic countdown. Five, four, three, two, one. End poll, share results. So top is the repricing of legacy clients.
Interesting. Interesting.
Um, Closely followed by talking money with confidence. And I think that's really actually pricing your services and then talking about money with confidence. And it's really interesting because I think right now that as accountants and bookkeepers, I keep on referring to us as the modern day bank manager. And if I kind of go back to when I was younger, my dad had a few friends that are bank managers, and they seem to know everyone. And that was kind of like what I wanted to be when I grew up. So bizarrely, I've turned around and I've ended up being, I'll call it the modern day bank manager, but without the money to lend. So in terms of what we're going to try and cover, it's how do we update the pricing? How do we kind of fine tune it? And I think this is a theme is going to be pricing isn't something you do once a year. Pricing is something you consistently do. So how do you kind of bring it to life, and how do you do it in the right way? Um, some of you on the call might not know what Socket is, and I'll take a quote from Stuart where he said, "I effing love Socket." And that's also permission that Stuart asked me before the call. Is it all right if he swears? So we'll get those apologies in now. But in terms of what we're doing, we're starting at the beginning. So it's about how do you get the consistency of your pricing so that anyone across your firm can do it. We've got a leads module into creating beautiful proposals. So within that, we've got three options. We've also got extras coming, which are almost like upsell opportunities. We've got the engagement letters through to workflow, linking in with your practice management, and then billing. So yeah, we've tried to kind of cover all of the boxes, and it's constantly kind of evolving. So yeah, if you want to find out more, head over to usesocket.com. So in terms of the first section, it's around your pricing strategy. And we did a survey, and I think the kind of the lead thing there was around value pricing. So hopefully the billing on time is dead. I'm never quite sure whether it is, but value pricing. And Stuart, I know that's something that you're quite passionate about.
Yeah, absolutely. And I've mentioned it in a few of the comments. It's easy to say price on value. Doing it is a little bit harder sometimes, and getting that across and how that works. And I think that's one of the key things in terms of on the selling piece, whether that's pricing or repricing, is how to actually communicate value and indeed record it is huge. And I think something that we've been reasonably good at and has helped. So I guess if you want to start with that, start with the value piece on
Yeah,
that.
let's do it. Let's do it. Let's jump in with that.
Yeah, so that for me on the value piece, where a lot of accountants go wrong and they struggle on that pricing point, is when they initially meet that client, how do you not sound like every other accountant that's going to talk about bank reconciliations and year-end accounts? And for me, it's stories create value, not the numbers that are there in front of you. So again, as you touched on at the start, for those that I'm sure lots of people on the call will know this, but I have my own story about my dad. He financially got into a mess and the impact that had. And I make sure that every single prospect hears that story. Like, it's finesse now to like a 3 to 5 minute absolutely line on line. It's a script I'm saying every single time. but it creates that sense of Christ, God, that is different. This person clearly cares about what he's doing. It creates value in a sense that I'm for me, I'm speeding the relationship up. And the second thing I do is I'm asking lots of questions on where their pain points are. And if they've had a difficulty with that, difficulty with cash flow, I can give them two, three stories of, oh, I've got a client like that that did X, Y, and Z, and this is what we did to help them. I'm not caring about, oh, well, we'll get the VAT return to you within 7 days, or we'll do daily bookkeeping. That's just the input, the output is what that did to that person. And I think certainly 80% of accountants that I speak to or I help with pricing, and it's not so much the structure around the actual pricing numbers. It's you haven't got any stories you're telling these clients when you're trying to work with them and woo them. So they don't believe it. And then when they look at someone else that quotes 20% cheaper, yeah, well they pick that one because there's not enough of a differentiator. So for me, value is stories and learning
Yeah.
that trade.
How do you get those? How do you give the confidence to your team to also tell those stories?
Yeah.
So that one about your dad is
Yeah.
very personal, but how do
Yeah.
you then share that with other people?
So we do two things, to be honest. So one is we have value registers for every single client that we have. So this can be financial or just general comment. So I've got quite honed at it now. When a client is on a call or meeting you and they say a sentence that's like, so many of my LinkedIn posts, like they're all real sentences, and I've literally gone, stop the meeting right there. Let me write that sentence down. What you just said was spot on. Like that's what we're trying to achieve. So writing things down in meetings and then putting that value down. So we had one where, I mean, we've reviewed a set of accounts that another accountant is signing off before we officially start, and we've just saved them £33,000 in corporation tax, genuinely, by just reviewing those numbers. We share that on the value register, we record that down, so everyone in the team can see all the cool things we've done for that client. And we have a kudos chat in our teams, which is a share all these cool things and these stories. So we're trying to build momentum, and originally it's me and Amy sharing all the good stuff and like, we're pumping it in. And now we're at a place where everyone is going, get their eyes a bit more open about the good things that are happening and doing. And it's that mantra and culture of sharing those stories and those values. And then once a quarter, we have what's called, based on the book traction, a meeting. And I'll spend a good 30 minutes of that meeting sharing client stories of real peoples that have gone through the good, the bad, and the ugly, and what that's meant. And that just gives them the tools to understand the difference that we make. And that's, I think, where a lot of things go pear-shaped. And then finally on that, the value register for us, also the client can see that. So we don't put it in the face every quarter, but that list of things that we are doing, often it's in the background for people. Clients either forget or we don't do a good enough job of telling them the cool things we're doing and what we've done. And we take it for granted that, oh, I've just made that VAT adjustment and it saved you £4,000. But do we sing and dance about it? Not enough in my eyes. So again,
Yeah.
having that in writing and on a client report is so powerful when it comes to going, and by the way, client, your fee's going up by £120 a month now as a result. It's so much easier when you've got that.
I think it's really an interesting one there about your fees are going up. Some of this is almost like if we're doing our jobs well, then our clients should be growing. And it's almost like if our clients are growing by 10%, then surely our prices should grow by 10%. And I'll kind of go back to something I was looking at, which is around the Office of National Statistics. They talk about turnover is increasing, but profit is staying the same. And I think that there's been so much like salary increase, cost increase, but I think sometimes we just lack that confidence of being able
Yeah.
to pass on the prices. So, how often do you review your prices then, Stuart?
So in terms of with clients, it's a quarterly in terms of a standard kind of review, and that there's a process in the background as we have quarterly catch-ups with clients. But there's a pre-process of the team, and again, I don't do that. It's all in socket, it's all priced up. The team review it and push it through. They do come to me with queries if it looks like it's often gone up or down a considerable amount. If there's something that's like, well, this looks more unusual, or look, we're only human. Sometimes they don't have the confidence I have, and if it has gone up by 500 quid a month, they'll come to me and go, "Oh, can you be on this call, or can we go through the steps we're going to need to get this over the line?" Because it's not easy the first time you do it, but Just the one other thing to mention while it's in my head on that piece then about confidence wise is, how many of you have asked someone out and got a rejection kind of thing? Are you all with the first person you ever went out with? You're probably not, or most of you aren't. We all face rejection in our lives and the no's. And my own wife now, I messaged her 7 years on Facebook repeatedly, year after year, before she went, Christ, right, fine, we'll go out, we'll meet, we'll go out for a date. Like I was so persistent, like it's unreal. And it's the same with services sometimes and value. So you said clients' turnovers going up, profit isn't. I have seen that with so many of our clients. But the reality is that's scary for them. The cash is often staying the same or going down because of that. It's getting the cash flow cycle is getting worse. The
Yeah,
last thing they want to do is spend more money with you. And I have had clients where I'm not kidding, for 9 months, every month I have gone to those ones and gone, you pay me 300 quid, you need a finance function, you should be paying me 1,000. No, no, no. Next month, you need to pay me £1,000. And they have said no 9 times. And eventually I've pushed and pushed and pushed and even gone, look, I'll give you a money back guarantee. If this doesn't work within 3 months, you don't start to see a change. And that's often the bit that gets them to go, okay, look, we'll give it a go. But again, for a lot of people, no is they see it as no and that's it. It's done.
yeah.
It's not. It's just a not right now is the way I see it. And look, we don't get them all, but if I had a pound for every time I'd got a no and I'd gone back and gone back and gone back, and the same is true. Again, I'm trying to give you takeaways, I guess, for people. If you do a prospect call and they say no, they're either going to stay with their account or they go with someone else. Put something in your diary for 9 months after that date to follow up, and 9 months after, go just checking. Did it work out staying where you were? Or did the new guy, were they all they promised for what they said they were going to be? And again, you'd be amazed, at least 50% of the time, I get some form of response of, yeah, well, let's have another chat. They don't all land, but we get to have another chat about things. So again, it's just what I call basic follow-up, but again, it's amazing how people take no and that's it.
I think this is the big takeaway when I kind of like left corporate world was I was a good accountant, but I didn't have all of those skills before I got to be a good accountant.
Yeah.
And it was almost that bit of it's bloody hard work of going out there and having the conversations, particularly being an introvert, you've got to get out of your comfort zone. You've got to have those confidence bit. And I really like the whole kind of bit around the story, and that helps you to frame something. The other big thing that I've seen in my own practice was around this kind of scope creep
Yeah.
and almost the kind of the confidence here of we price for the scope of work. If it's not in the scope of work, then we effectively go back to the client and say, yes, we can do it for you. Here's a price. Do you want us to do it? And ultimately, we're ending up with almost like three decisions. Yes, crack on and we get paid for it. No, I'll do it myself. Or quite often, it's that bit of going, actually, it's not that important. And by just putting in that kind of strategy of going, we charge for extra work, we're typically getting an extra 10, 15% of
Yeah.
project work each month. And that's probably the work that we were giving away for free. So for me, it's almost like some of these bits are working out what the right rhythm of things are to do and then kind of keep on doing them. And I liken it back. We had a great guy working for us called Shennell. And growing up, he worked in a chip shop and he kept on kind of going to me and going, John, if someone comes in and asks for chips, you don't give them chicken in chips, do you? And I think sometimes it's that bit of going, yeah, you're right. They're just buying chips from me. So if they want any more, then I've got to be a little bit more
Yeah.
kind of pushback on it.
But I think some of that comes from as well being granular in your pricing and evolving it. Because again, when we started, even at Cloud 10, with all the years of experience of different what an outsourced finance function was, actually, when it came to supplier payments, it was like, oh, actually, there are a few more factors in here now of foreign payments versus UK payments. And do they want a wallet? Do they want to pay it directly through Xero? And those things change price. And What I have learned is even if I give our biggest client pays just over about 5 grand a month, and I give them that number, I haven't broke that down for them in all the detail, but in the background, it's so granular in terms of what that is and what that looks like. And a common thing on that is, yeah, not being detailed enough on what those drivers are when you are setting that pricing.
So we got hammering. So I was really lucky early on that we got a client that paid us a lot of money for it. And so I always thought they're paying us a lot of money, but their turnover was rapidly kind of increasing. And my bit is I focused on the amount, not what we were doing for them. So as the turnover went up, I was really proud about us keeping the price exactly the same. And then that day comes where it starts to kind of soften off and then it started to decline. And then I got a little pushback from it of going, our turnover's reducing. What are you doing about the fees? And it's almost that bit of I had to go back and kind of explain, oh, we've absorbed everything on the way up. So actually now it's about there's not the chance of giving you money back because we've automated so much. And actually, it was the start of the end because it kind of broke down. So I'm a real fan now of almost that bit of complete transparency. As things increase, you are then starting to kind of push it up and you are talking about what drives that. And if a client wants us to do something, we will do projects to make them more efficient. But again, they're chargeable.
Yeah, yeah, absolutely. And again, I think over time you develop those things and those service lines and that level of detail. And again, my take on it would be certainly around like finance function stuff. It's that confidence for pricing right from the word go. With that, again, if I had a pound for every time when I started, I underpriced almost every single service, budgeting, cash flow services, particularly around what that base price was for the work that was involved versus the output, and massively understated that. So um, that's something I'd seriously think about around. I think a lot of accountants naturally underestimate that time, that planning time that goes into
Yeah.
some of those services. So using project work, like you say, for that basic, even for that initial build or that initial piece of setup, often gets missed. And we do a lot of work on getting things working, and then haven't been paid for it, and we need months before we actually see any kind of profitable
Yeah.
payback. Then, so yeah, that's
Before we
certainly challenging.
before we move on, Stuart, there's two things I want to ask. Do you charge for onboarding? And then the second thing is just to share what you do around KPIs, because I think
Yeah,
that for me is a real like eye opener around you doing them. And I think it's almost that I wish I'd done it as a poll is how many people do KPIs because
yeah.
I imagine there's not many.
Yeah. So in terms of monitoring, I'll start with that question. And in terms of monitoring the numbers, I mean, for those that know me, I'm a big fan of Traction and Gina Wickman's work and scorecards and monitoring in detail. So for starting a pricing strategy, again, it's kind of crazy sometimes how many accountants don't have their own forecast and don't have their own KPIs and workings for their own finances. So if we think even whether it's repricing or pricing strategy, building your own forecast and knowing, going beyond the detail of what the average fee per client is and what each person can hold as a fee in terms of like ratio of salary to income, like working that out as early as possible is absolutely huge. And we have a weekly scorecard with KPIs that monitor everything and everything from like finance wise, cash balances, debtor balances, operationals, like year end accounts, how many of them are beyond 3 months past the year end. And those are great signs of symptoms of things like pricing being wrong. If people are overrun, but the profit margins aren't right, then the chances are that something or one of the services is wrong. And we look at KPIs on individual detail, but also I look at pricing per bulk of service, so bookkeeping, management accounting, accounts compliance, pay as you earn. I mean, that again, cheap plug for Socket. The report on that's really cool of setting that up. And I've got a little chat GPT robot little job now that pulls that out and does some cool stuff at splicing that up. I could go on forever about ChatGPT about the cool stuff that can do with some of the reports as well. But anyway, it gives me an understanding of even at a basic level, like management accounts were massively underpriced at first. And I just took the management account sections of fees, looked at the salaries of our staff and the time they were spending, and fag packet went, well, that person's on 50 grand. They're spending 30 grand of their salary a year on the management bit. We're not bringing that in on those clients. Like that is something is wrong. Either the wrong person's doing it or a pricing on that is wrong. And sure enough, our management fee went from what we used to do one lump fee for management accounts, which blows my mind. Now that's split into management prep and how difficult that is of like basic accruals, prepayments. The actual report itself, do you want Xero? Do you want Futurely? Is it customized? Is it standard? And then finally the meeting, is it monthly, quarterly, Zoom, face to face? And those three sections now have their own variables, but that evolved from literally a KPI, just broad brush of what is our management income versus our salaries. And again, so many accountants run blind in their own business
Yeah.
on their own numbers and scorecards. So forecasting and scorecards are the start for me of, although it's I think it's boring as hell going through that detail and working through it. That's a really important part of understanding like where your pricing is. And it's easy if you're on your own, it's not as complicated. It's easier. You know what you want to earn. You know what your client needs to be. You can skip some of that stuff. If you're employing people, it's a different kettle of fish. And again, I know lots of people that price great when they're on their own, but as soon as they want to employ someone on a decent wage, it's out of the window. So
Yeah.
doing that early if you want to employ as well.
Yeah. And then the second question was about onboarding.
Oh, onboarding, yes. So onboarding, we do and we don't, to be honest, and that depends on the size and complexity. Is the honest
Okay.
answer. So if it's a small, we have two buckets of clients, kind of general year-end account clients that pay anywhere from 150 to say £500 a month, and then the more detailed outsourced finance of some degree. Again, 600 quid won't get you a full-on outsourced finance function, but there'll be elements of things that's beyond year-end accounts. Up to, let's say, 5 grand. They have an onboarding fee of some description of something that will need setting up. And then even the smaller ones, if there's like pay as you earn to set up or VAT to set up or actual registrations, they're always charged like as and when they hit. And then we also, I mean, I am getting wise now to how many accountants clean up a previous accountant you don't get paid for it. So there is a little proviso of the numbers that come over, of what comes over is a certain quality and then understanding it will work. So I don't do it very often, but I've done it twice so far in the last like 3 months where I've had to go back and go, this is a dog's dinner, like these numbers are wrong. Your old accountant can fix it, or I have to get paid to fix that. And again, it's not a nice convo, but if we're explaining value and why it's wrong well enough and with the difference it will make, then it's an easier conversation.
This this takes me back to like Xavier days. That was one of the kind of the selling points of you can plug it in
Yeah,
with the health score, and if the health score was not very good, you can then push back to the old accountant and
yeah.
say who's paying for this kind of cleanup. So yeah, lots of kind of takeaways there. So let's move on to the next one, which is about optimizing your pricing for today. I think we've touched on some of the kind of the questions here around kind of like seeing the benefits. And I think you keeping track of that register is an incredible one there, Stuart. And Jane asked the question around, do you share the value register with your clients? I think the answer there was yes.
Yes, it doesn't stay like front and center like every single time, if you like, in terms of like every meeting. We're like, look at this value, look at what we've done, but it's part of a report that especially when there's a big win, particularly, it gets added to that register and then it's shared and where it's up to. And then again, we use Agendally, which is a great piece of meeting software that I would recommend because that stores. The other thing is client goals of like storing what they are. So again, when we're doing management accounts, generally speaking, it's not here's your management accounts. I mean, I pinched this. I think it was James Ashford of like what that top goal is like how we get to Australia to watch the cricket or whatever that goal is like. There's a centre around that.
Yeah.
So that's all kept in a software called Agendally. And again, the other thing I can see with that is it tracks meetings of how we've had them. So quarterly catch-ups are massitive for us for adding value and getting the price right. I can run that and say, hang on a minute, this client hasn't had a meeting in 3 months. Like, what has happened there? Like, are we letting the side down and not adding enough value for us to even
Yeah.
justify the current fees? Never mind more. So
Yeah.
that's fundamental.
I, I
Systemizing
think
that.
I think what you said there is really interesting about making some of these conversations personal because I think all too often it's almost like you'll say to a business owner, "How's it going?" Or you say it even to a firm owner, "How's it going?" And straight away they talk about the business as opposed to talking about
Yeah.
them. And I think this is the bit of almost like how do we start to kind of work with the individual themselves so that we can get them kind of excited And I know
Yeah.
in my own practice, we're almost using year-end accounts is that perfect bit of asking the question of, well, that's what last year looked like. What do
Yeah.
you want this year to look like?
Yeah.
And then that almost leads into, right, okay, we've got a bit of a target. Can we then start to nurture them into the management accounts
Yeah.
so
Yeah.
they've got
Yeah.
that's something exciting for them to go after?
Yeah, and that's a crucial word, exciting. Like, how many people that aren't geeks like us? I mean, my wife hates looking at like the concept of the numbers and understanding them, and I think we take for granted when we talk about value, we need understanding. And how many times I sat in many partner meetings at my old firms, and the accountant would they'd get the balance sheet out, they'd talk about it, they'd get the P&L out, talk about it, accountants would sign it off, and I could tell the person at the other side of that table didn't have a clue, but we're too embarrassed to say, I don't know what the difference between these things. So
Yeah.
again, when we're creating value and understanding to make it so people know what we're doing, ask your clients, do you know the difference between a P&L and a balance sheet? And I bet 70% will go, yeah. Ask them tell them, what is it then? You tell me. And again, at least half will get it wrong or be embarrassed by it. And then ask them what the most important number on the balance sheet is, which I would say in most cases is net current assets. They won't know that. They won't know what net current assets means. Teach them, and don't tell them once. Tell them again next quarter and again next quarter, because they don't do it every day. And that builds excitement and understanding around numbers. And for that movement to management accounts and adding value, like that is my little trick up my sleeve, the basics, just explaining them really well and humanizing those, because we take for granted that the people at the other end understand this stuff, and the reality is they don't have a bloody clue. So value comes from understanding.
Yeah, and I think the whole relationship improves as well. So
Yeah.
I've got some examples of that where it's almost like when you first start. So I'll go back to one story when I first started, and it's almost like they had a special machine which had Sage 50 installed on it. And it's then that bit of installing Xero, getting them to use that, getting the MD to start going in and looking around. And the whole conversation kind of changed over a period of time. And I loved going in there then and having like that next level of conversation, which wasn't around like the balance sheet. It's more like, where are we going? How
Yeah.
do we get there faster? And my life just then became an awful lot more enjoyable as well because you're getting stimulated and sometimes they're giving you ideas that you can take away and put in your own practice.
Yeah. Yeah. Oh, 100%. I mean, that's another question. For those clients that are smashing it and doing well, I love to ask them, what is the secret to your success? What one thing are you doing
Yeah.
that is beating the competition? And clients love that. They love that level of, oh God, look at me being there. And nothing I ever said on anything is original. It's everything is pinched from somebody else, including our own clients that are doing great things. So
Yeah.
yeah.
I want to pick up on one point, Stuart. So when we were talking about it, almost like the misconception that the struggling client
Oh yeah.
won't pay for the
Yeah,
service.
yeah, yeah,
I think
yeah,
you've got some good stories
yeah.
behind that.
Yeah, so we've had a few. So of our top 10 clients, five of them would be in our kind of bottom 10-15% in terms of performing clients, in terms of how well they are doing cash flow wise and managing those daily figures. And there is this misconception that if someone is struggling financially, then they can't afford to pay you. And the reality is they need you more than anybody. And having a really brutal, honest conversation. So I've got there's one client that's a jewelry client but again, this was a legacy client in terms of that pricing as well. So it was originally at my old firm, and it's funny because she's followed me now to Cloud 10. Once covenants were done, might I add. But anyway, for the lawyers in the room. But originally, like she was paying like 350 quid a month for next to nothing, and that fee had to go up to £1,400 a month. And that was, you need this to survive. You need this for us to better deliver like weekly cash flow meetings and support. And again, it's a hard pill for someone to swallow, but you're preaching to their need to survive and what the afters will be, not you need to pay me more because we're doing more bank recs or you need cash flow services per se. And again, they never stopped after that point. Even when things got slightly better, like that level of service and support and that comfort has never stopped. And it's been fundamental to her still being around. I can guarantee you she wouldn't be around right now in that business had we not increased that and really managing suppliers and who was getting paid when. And it was absolute carnage at that point. The other thing with legacy, so that's one thing on those that are struggling is don't be afraid to they're the ones that need the help. Is don't be afraid to let go of clients if it's not right. And I think sometimes there's this feeling that, oh, it's a failure if one of them leaves and it's a big fee. And it might hit your own cash flow, short term, but the reality long term, it will kill you. And in the book Traction, there's a thing about being a guy being on the edge of a cliff and he's holding a vine and he's praying for help. He's clinging onto this vine. He's like, I need to get back up. I'm going to die. And he preaches to heaven and says, God, if God is out there, please help me, save me. I need saving. And then a voice from the air comes up and says, I'm God, I can save you. Do you trust me? And he says, yeah. You need to let go of the vine. And he says, is anyone else up there? And you kind of like that's what it is with some clients that we've
Yeah.
got. We've got one right now that's paying us about £2,000 a month, and it should be 3,700. And I had this conversation with Amy of we're going into that next month of like it has to be this. Things have changed this quarter significantly, and if not, that's okay. But we're okay to walk away from that, and that's
Yeah.
it's so uncomfortable, but it does get easier the more you do it. And it has to be win-win for both parties. They've got to get value and understand it, and you've got to get paid right as well. And that 1,000 gap that we've got on this one with changing in services and indeed their internal team means we have got to change it, or we are massively subsidizing that client, and
Yeah.
that's hard to go into that, but it's got to be done. Unfortunately, let go
So,
of
so
that
you,
fine.
you talked about letting clients go, and we've done this on two occasions, and we've kind of pushed it out to the team in terms of you can let any client go, and it's almost like we're not going to question. And so, actually, who do we lose? It's probably the ones that I said yes to because I lacked confidence about where the clients were going to come initially, but we also let the ones go who weren't very responsive.
Yeah,
We let go of the ones that were really noisy and didn't pay us very much money, or the ones who wouldn't answer an email until they wanted something from you and then
yeah,
they were kind of hassling. And so it was a great exercise to push out to the team and go, right, you can let it go. You can let any client go, but profit's going to suffer. And literally within 3 months, we'd closed that gap.
yeah,
We'd closed that gap with existing clients who we'd gone back and we'd repriced, or we had um, spotted opportunities. And there's someone I know who's doing something really, really kind of clever of training their team to kind of step up. Every piece of work that they do around like a VAT return, they will get their client, they will get their client managers, their team to kind of come up with three recommendations as to what would you do for this client. And it's that real nice way of just going back and saying, we've been thinking about you. Here's some things that we could do, which is then
yeah.
delivering on those upsell
Yeah,
opportunities.
yeah. That's really good. I think there are a few nuggets in that one. One is the transparency that you started with, of the team transparency and awareness. And again, bottleneck and pricing problems with firms I'm worked with can often come with because one person holds the key to all of it. They see the numbers, it's not shared. You can't ask your team to be commercially aware if they're not running a business and they don't know their own numbers, in my opinion. So again, I'm a big fan of share those numbers, share that profitability, share those salary brackets, even if it's in those teams and pods, and you're giving, like you say, them the power to make that decision of what works and what doesn't. So that's a definite massive one. The other thing that we do on that whole the client won't respond, I find in life, people are either carrot people or stick people. They like the treats and the nice talking and the selling the dream, or I'm a stick person, true. That's why I surround myself with Amy and, Darcy as well before that.
Yeah,
They
yeah.
were stick people to me. They were people that just kept me on the right track and were like, just do this, or you're in trouble with me. Like, do it. I need that stick up my ass of just do it, or it doesn't work. And some people are like that. So to those people, we say, look, you're paying 200 quid a month for your bookkeeping, but I'm for these 200 transactions or whatever, I'm asking 4 times. So that number of transactions, I'm going to artificially raise that to 400 because I'm asking for it multiple times. So your bookkeeping's 400 quid from next month. Or you can start replying and it'll stay at
Yeah.
200. And you'd be amazed at how many times that improves. Or some just go, right, yeah, fine. And it goes up. And that's okay. I'm okay with that if the price is right for effectively doing extra work for it.
Yeah. Yeah. No, I
But
get it.
again, that's quite bullshit. And again, people go, surely people don't just accept it. But again, it's a lifestyle choice for those people of whether they want to be asked doing it or not. And I'm okay with people not or being a bit more chasey if that's factored into the way that we're doing it.
I think some of it is it's our businesses,
Yeah,
and so actually it's how do we want to kind of come across? What do we want to do? And it's like I always say that I'm the pub landlord in the sense that I can't go and get a job somewhere else. So if this isn't working, I've got to sort it out because actually I'm the one who closes the door. So yeah, we've got to take a little bit of responsibility. I want to pick up on the KPIs because we run some KPIs in FT Works. So the first thing is around the operating profit. We have to be between a certain kind of range. And for me, one of the things that I don't see enough people doing is reflecting a commercial salary in their management
yeah,
accounts.
yeah,
So why do you need that? So I think you need a commercial salary because at some point in the future, you may step away because you want to do something different, and your business needs to be commercial enough that someone else could come in and do it. The other thing that we do is we have what we call a labor efficiency ratio, and this is the connection between gross profit and basic salaries, and it
yeah,
runs. So we've set a limit between 2.5 times. So if we go below 2 times, it's almost that bit of going, actually, things aren't looking great. We need to up our game. If we get to the 2.5, it's almost that bit of the team are running kind of faster. So ultimately, what we're doing there is we're giving the team a couple of choices. So one, they'll do they need capacity? So it's almost that bit of do they need to create space? Or in which case we'll hire, or is the other option, do you want to a pay increase? So again, we are quite transparent around our numbers because I think then that drives the right behaviors in the
yeah,
team. And what we're trying to answer, or what I'm trying to answer, is what's in it for me? Because if you can't answer that question of what's in it for the people around you, I think you're going to end up with people who are just, it's that greed bit. You're going to be incredibly greedy, and then actually it's going to unravel pretty quickly. So I think that there's some real simple ones there of make sure you've got a commercial salary, make sure you've got an operating profit in
yeah,
excess of 10%, well in excess of 10%, and labour efficiency ratio and push
yeah,
stuff back to the team. And I
yeah.
know that's something you're very strong is
Yeah, labor
salary.
efficiency was massive. And again, a cheap plug for Socket, but since that came in, we've split our income lines differently. Because again, we had recurring income that was a figure, and then that was used for the ratio of efficiency. In reality, there's a software recharge in that, which is going actually straight to Xero, straight to Dex et al. On that front. So we've now split. We've got recurring and one-off income that's pure, like the what the peeps are doing, and then the salary costs. And then we've pulled out payroll income because again we've white labeled payroll, so that is completely separate. So we've got a payroll profitability line, and then software costs of all the direct software costs. So your future leads, your Dex, your Zeros, and your software income. And interestingly, like we are losing money on software that we hadn't clocked in the last 2 months. Like, I sit with the pricing girl, but I hold my hands up and go, it's not all perfect. It's not, things aren't live all the time. And splitting that up in that level of detail has gone, hang on a minute. Like, and we run a similar one of like, we are generally, yeah, at 2 times salary to that 2.5 bracket is that point of I don't want to be too high almost because we're stretched. And the thing we really monitor is one-offs as a percentage of income because they're the grenade sometimes. They're great and they're profitable, but they can grenade workflow and you can have a great month, but the team are slaughtered. So
Yeah.
the other thing we've done on that front is when one-off work is coming on or new catch-up work, if we're really busy, again, Socket might give me a number, but I have that is the baseline number for that minimum amount. And then there is a, hang on a minute, like if they want this turnaround in a month, like I'm quite comfortable 2 times in that number for that project. And it's that's fine. Or yeah, we can do it in 3 months when we've got a roadmap for it and it will be less. And again, I don't see many people particularly around one-off, go, oh, they're desperate to get it in and do it, and they're not going, hang on a minute, yeah, but it costs more, you know, it needs to be quick. There should be a price to that urgency. And again, monitoring that now has been huge in terms of that split and that KPI for
Yeah.
labor efficiency.
I think that's really interesting because we value price things like year-end accounts. So if your clients wants the accounts early, might be because they've got an R&D claim or they've got a mortgage certificate they want to do, we will charge premium. Again, we're starting to explore charging a premium for management accounts. So if you want it within 3 working days, yes, you can, but we'll charge a premium for it. So
Yeah,
we're almost looking at pricing as to how to work for us. But I really like the idea of almost charging that premium for the one-off type projects.
yeah, yeah, 100%, 100%. And again,
So
it's only through the last few months that's again it evolves all the time. Like that's something for recent of going on a minute that this KPI set is showing me that like the labor efficiency is far too high almost. The team are under too much pressure.
yeah.
Let's change it.
So that leads nicely onto the future proofing of your pricing.
Yeah,
And I think this is almost that bit of we can do things to almost like make ourselves more efficient, but actually I don't think it necessarily comes back to then, oh, we're doing this quicker, therefore we should reduce our prices. So I know in FD Works, we've invested an awful lot of time around the VAT return. And for me, that's the bit where actually we can be a little bit more relaxed around the bookkeeping because we've got this great control process
yeah,
around the VAT return. But actually, what we've done within that is we're doing some real kind of like logic bits of, well, if it's the same every single month, then you can kind of ignore that. But that's just making those processes more and more efficient and valuable for us. And I
yeah.
think it's too easy for us to turn around and go, takes less time, therefore
Yeah,
reduce fee.
100%. It's that whole guy in it with that there's a ship and that 100 people got to try and fix the ship and spend hours on it and no one can do it. And a guy comes out and hammers the ship, one hammer, bing, fixed. And it's like 2 grand, please. But you only took 2 minutes. Yeah, but 20 years learning that of where to hit that hammer. And it's that same principle. So don't
Yeah.
forget where the value lies in what we do.
And I think we're also, so I had a catch up with Dan, who's our kind of creative lead, and he was really good of almost that bit of when he takes his car into the garage, he gets this really nice kind of sheet from the garage, and it's almost like I imagine it's someone on reception
Yeah.
who's kind of put their greasy hands over it. They've got special ink pad below it.
Yeah.
He almost kind of like came away and go, actually, I feel really valuable because I know the level of work that's involved in it. And again, I think sometimes that what we need to do is to bring a little bit more like marketing
Oh
in,
yeah.
a little bit more content into this is what we're doing, and this is
Yeah.
why it's not just a
Yeah.
push of a button.
Yeah,
We've got
similar
your
to that
back.
car example. Like when I get my car serviced, I get a video now under the car of what they've done. And when we do VAT returns now, they get Loom videos of what we've done, what it looked like, what the changes are, and it's the same mentality of that, showing the value of what's under the bonnet, what's going on. 100%.
A question for you. Have your client profiles changed over time?
I think we've certainly do way more outsourced finance function and chunkier clients than I ever envisaged in terms of the kind of support that we were doing. And I think that's partly with our own confidence and partly with the tools that have become available to do it. And certainly even on the smaller end, culturally, they're not much difference in like the different types of industries, but people that give a shit in terms of like
Yeah.
they might be a painter and decorator, they might only hit 100 grand turnover, but they care about what they do and are bothered is probably the biggest thing. And those that don't, generally speaking, don't last too long. So
Yeah.
we've binned off 2 clients that one was after 1 month of onboarding where it was like you are not our fit, like you are an arsehole in the nicest possible way. Another one after a few months where it was clear that like there's just there's a gap in terms of what we believe we are delivering and what the client is wanting for that price. Is like, look, you can have that, but it's going to cost more. You cannot get all that. Some of those are repeat scope creep offenders that want to push and push and push, and you kind of like, you can have it, but it cannot be for that number. And that was the other one where we had to pull the trigger and just go, look, this isn't. You're unhappy. We're unhappy. Let's call it quits.
Yeah.
And sometimes I'll try and find them another accountant that will fit them better. The other bit on that, on one of the nuggets I haven't mentioned yet, in terms of future proofing, in terms of scope creep, and in terms of what you do. Again, it's only a really recent thing, thanks to the power of Socket and having 3 pricing options. I now, with new clients and indeed existing, whenever we're doing quotes or what we can do, we have the basic option at one price, the next option, which is just a bit more expensive than the original one. So it's only £100 more, so something like that, for a few little extra bits, but it's teasing. And then a monster price that's like, I did one that was like £400, £600, I think it was, and then £2,500. That was the boom, bells and whistles. That does 2 things. Number one, well, 3 actually. One, it shows all the services that you can do, so you don't have someone going, "Oh, didn't know you didn't do cash flow." Like it's there, and there's a price for it. It helps with scope creep because then they know, oh, well, I'm asking for something that's not on this list, but it is on that one, and that will be the price of it, so it's there. And also from a sales point, it sets that. God, £400 might be a lot to some people, but it's not when compared to £2,500. So you just that. It's an Alex Hormozy thing now of copying him, of trying to just be like that whole mentality around it. And that I've only done that for a couple of months, and I've had 2 clients sign up on over £2,000 top fees that I did not expect them to do, and was like, oh, whoa, that's pretty cool. So that's on every single one now as an extra bonus nugget.
Madness. That's madness.
Yeah,
And again, another top tip is in Socket, you can include a PDF. And
yeah,
what's really nice there is almost that bit of with your existing clients, it's a really nice way of reinforcing what you do or what you can do. Because I know we've lost a number of brilliant clients, and it's because, oh, I'm going to work with Stuart because he's promised to do this, this, and this. And it's like, and they almost finish the conversation by going, "Oh, and you don't do that," and you're sat there going, "Yeah,
yeah,
we do," and it's almost like, "Oh, I didn't know, and it's too late now." So I think sometimes it is that bit of showing all of the service you can do is
yeah.
that.
Yeah, and those do. Someone's asked a question in the chat. Yeah, those 3 get sent to the client on the proposal of like these
But
are
as
the
one
3.
proposal.
As one
So
proposal, one proposal. Yeah, one. Don't get 3 emails. And I used to believe that we would make the client's choice for them. And I mean, again, that was the school of James Ashford, to be fair. Which I kind of now go, no, I don't think so. Having done this a few times and done
yeah,
this, I don't think that all the time. I think sometimes we should be definitive. Like if I went to a doctor and they went, "Eat all the cheeseburgers you want," I'd be like, "No, you're a crap doctor." But a doctor can give me a baseline of, oh, you need to not do this and not get blooded every Friday night. But if you want to go further, you should go running as well, and you should do something else as well. Like that's kind of how I position it now. Is baseline has to be minimum of like you have to do these things to be okay, but there are extra steps you could take to be
yeah,
more kind of
yeah.
financially supported with us. Is how I
Yeah,
pitch it
so
now.
so that's called options within
Yeah,
Socket. And then we've also got a new feature which is behind a feature flag and will be out within the next week or so called extras. And with that, that's almost then where you can the client can then self-select. So you've got the 3 bigger options, but then it's almost they've picked which one they want. You've then got some upsell opportunities. So again, you could be surprised as to what the end
yeah.
outcome is.
It's so sweet when the email comes through and it goes, boom, you've just signed a proposal for £2,500, and you're like, ooh, yes.
So,
uh,
so tracking volumes and
yes.
adjusting the price over time.
Yep.
How often?
Yep. So again, Agendally we use is like our meeting software to make sure every quarterly that's getting reviewed. In terms of actual line items being reviewed as opposed to clients, that's done in a couple of ways really. One is when we're monitoring clients and profitability, if we've got 2, again, we use timesheets, not in detail, but just to get a feel for what kind of activities we're spending time on. And if I've got 2 clients that have both got 500 transactions that are both in the same industry, and one it feels like a nightmare and one isn't. It's why, what is it that's driving that? So
Yeah.
in the past, it's been things like CIS that wasn't, that the way that was structured wasn't maybe split. It was, what management accounts are they getting? Are they customized? How customized are they? And are we reporting to one person at their end or three different people, for example? Like these things you don't think about all start to evolve that. So they just come up like as and when. And also not just going up for prices, but down. Another one for some of the e-commerce businesses was doing the go cardless Rex is a piece of cake. Like that's too much to charge him £1.20 per transaction. It's ridiculous. We're pressing one button and it's wiping 100 off. So we brought that down to like 10 pence a transaction. So that is just an as and when. And if the team are involved, again, they're good at saying this feels wrong. To be perfectly honest, is a great way of doing it. But again, and the other thing, it comes back to having a forecast, having a target, and going, are we on track for the revenues of the client numbers? And if not, then something again deep in that pricing is probably going wrong. The other bit is obviously, again, now I've got socket and monitor. That was oh my god moment. Now you can plug in your Xero bill and it shows per client what you charge compared to what's in every proposal. And that, my jaw hit the floor when I was like, God, some are being overcharged and some are under for that software. And it was like, there's an easy win. Like we're throwing £7 a month away on several clients here for no reason whatsoever. But it's amazing how sometimes those little things get missed, even in a quarter or two before they get
Yeah.
caught up.
Mine was out by 25%. And it was the little bits of, I can't be asked to put this
Yeah, it
through.
is. I'm
And it's
rubbish at
almost,
that.
yeah, it's almost then, and then it's like, oh, and then they've upgraded and no one in the team's done anything. And then they've got feeds, oh, and they're doing payroll on it. So yeah, for me, that was like that was one that I
Yeah.
was keen for us to get
The,
building.
the other thing I would say on repricing is if you're running the business, like don't make it your job descriptions, like head of sales, head of ops, head of finance, and do not make yourself the head of finance. Give it to someone else in the team, because like it's funny. I've been nagged already today by Amy that close of play tomorrow for socket proposals updating. It's got to be done. If it's not done, it's missed. And I've already been put under pressure for like 4 proposals I know I need to update. If it was left to me as head of finance, I would leave it till next month because I'm busy. I've got other to
Yeah,
do. But systemized it, and it's someone else's responsibility in my firm to run our numbers. And that's her KPI of like, are they right? So she
yeah.
is hounding me now today of like, you need to update that, you need to update that, you need to update that. So systemized and building people around yourself to do those things. And Amy's only just qualified. It's been, it doesn't need the most senior person to, if you build good processes and people that care, that's more important than 50 years of experience and ability to do it.
Great training. Like for me,
Yeah,
it's that whole kind of bit of great training. So yeah, that's incredible.
yeah,
So we've got 3 minutes. One bit. So I've got one last point on here is don't forget about your good clients whilst
yeah,
you're doing MTD it. And I think this is the bit of remember who your clients are that pay you well, that excite you, and make sure that you are giving those the time and attention that they need. Because I think sometimes they are the quiet ones and it's the noisy
oh
ones
yeah,
who don't pay you enough money, who are pains in the ass. So yeah, it's your business. You kind of own it.
yeah, 100%. It's so easy to miss that on the good ones, taken for granted. And then you get a ball out of blue and they leave, and it's
Yeah.
like, whoa, where's that come from?
So we've got 2 minutes. I want to wrap up. I'm just going to say if anyone's interested in finding out more about Socket, they can head to either the website usesocket.com. If you haven't signed up to it yet, reach out to Stuart and get his referral code. And then you can put that in and it will do him proud and you proud. The other thing that I'll touch on is Stuart has got a few tools around how he prices. He's also got a tool around KPIs. So again, if you're keen to understand how Stuart does things, then kind of reach out and yeah, you can find Stuart on LinkedIn, TikTok.
Indeed, TikTok, yeah, still being stupid on there as well. Yeah.
So yeah,
But
without
LinkedIn is a place I live. If anyone wants to drop me a DM on there for anything that we do, help out. We've also got NED with a couple of accounting firms. I'm looking to be an NED on a couple more. So if anyone was interested on having me on their board, then that's an option too.
Perfect. Perfect. So hopefully no one's been bored today, to get a little pun. Thought I'd get that in there. Thanks for your time, Stuart. I absolutely treasure having kind of conversations with you. I hope people have got a bit of value out of it, and there's a few takeaways that you can kind of take. And yeah, it'd be great if you can kind of like reach out and say thanks to Stuart on LinkedIn. That would be incredible. But Stuart, thanks for your time,
No,
and
thanks for
I'll
having me.
catch up with you soon.
Amazing. Thank you.
Take care.
Okay,
Bye.
bye-bye.